I'm Sarah Borgson-Keto, and in conjunction with NAREIT's REIT Week 2020 Virtual Investor Conference, I'm joined today by video link with Drew Alexander, Chairman, President, and CEO of Weingarten Realty. Drew, thanks for joining me today.
My pleasure.
Can you talk about some of the changes that Weingarten has made to its portfolio in recent years and how that positions the company to tackle the challenges of today?
Happy to do that. First, let me say my hearts and sympathies go out to everyone who's directly affected by this crisis, and best wishes to especially all the first responders, including those folks running, retail stores, that are essential in helping us through this. So looking back to the changes at Weingarten, we're very pleased with the efforts of our strategic transformation. When we came out of the global financial crisis, we gave great strategic thought to what was important and decided to upgrade the quality of our portfolio. So we exited a lot of states and really put a great focus on quality. We had a tagline in our roadshow that says, "Goodbye, Kansas, hello, Hollywood," recognizing that we exited several states, Kansas, Louisiana, Arkansas, and bought a big project in West Hollywood. In 2016, we felt we were done with the transformation, but then the world sort of changed in the fall of 16 and we took a new look. So if you look over the period from 2010 to 2019, we sold $3.4 billion worth of properties. We bought about $1.6 billion or developed $1.6 billion of properties, very well located, and basically improved every metric in the portfolio. With average household income up about 25%, household density up a third, and supermarket sales up 50%. Sold a lot of watch list tenants. So I think it very well positions us to navigate this crisis.
Weingarten entered the crisis with a strong balance sheet. How do you think that positions the company to possibly see new opportunities for growth?
Well, we're very pleased with that strong balance sheet. Again, one of the benefits of the transformation. And we'll certainly look at all avenues of growth. I don't think there'll be incredible development opportunities, but we have a very robust redevelopment pipeline. We'd identified some $2 billion of densification that, frankly, with all the tenant restructuring that we're doing, we will free that up to do it a little bit faster as conditions warrant. We'll also continue to look at acquisitions where it makes sense. We're very happy with our geographic footprint. We like being in the southern and western United States, from Seattle, Washington to Washington, D.C. We think those states are very well focused to benefit in terms of better tax policy, generally more pro-business, good weather, migration within the United States, immigration to foreign trade, et cetera. So we like our footprint. We might look at opportunities to expand that footprint if the right conditions arose, but we're mostly focused on filling in and continuing to be a significant service provider in those key markets in the southern and western United States.
More broadly, how do you expect the coronavirus crisis to change demand for real estate within your sector?
So again, going back to the transformation, one of the things that we saw was the longer term evolution, and that has certainly been accelerated by this crisis. We still believe that the bricks and clicks, the so-called omnichannel model, is the winner. That when you look at the vast majority of what our tenants sell, supermarkets, treasure hunt apparel, those kinds of goods and services, the profit margin on those things are too low for it to be delivered for free, to people's homes. So we've always felt and still feel that in the future there'll be a menu. Sometimes consumers will be a little pressed for time and they'll want it delivered. Other times they'll get it themselves. And then there's, of course, the buy online, pick up in store, which has also been accelerated. We, like everybody, pivoted to more, curbside, in our centers. So again, when you look at the cost, we think the omnichannel wins. We've got lots of real estate in very close proximity, and that last mile delivery, is still expensive, especially for the profit margins of what our retailers sell.
Drew, thanks again.
My pleasure. Nice to see you, albeit video-wise, and thanks for NAREIT for organizing this.
And for more news and information on REITs and listed real estate, be sure to visit NAREIT's website, REIT.com.